After investor firms Ark House Management and Brigade Capital raised their bids for the retailer, the new offer values the company at more than $6.5 billion. My next guest recently raised his price target on that company following last week's earnings beat, citing potential for multi-year growth. Joining me now, JPMorgan's Matthew Boss. He is ranked as the #1 retail analyst on the street by Institutional Investor. Welcome back.
Thanks for having me, Scott.
How's this going to play out with Macy's, do you see?
Look, I think Macy's is laying out a fundamental opportunity. That was their bold new chapter plan. We actually were in stores this weekend, and I'll tell you, some of the test stores have better staffing. They're amplifying the key brands within the box, and they're really focused on expanding the TAM, which I think factors into a lot of retail consolidation. Macy's itself closing the worst 25% of locations since the pandemic.
Sounds like you're describing what you think might be an inflection point. I mean, those are my words, not yours, but that sounds to me what you're describing. You raised the price target to 23 from 19 a week ago.
Yeah, look, I think we're hitting an inflection for all of retail, meaning you had a period of brick and mortar consolidation. I think Macy's is potentially signaling the later innings of this in this final consolidation of 25% of the boxes. I think you're seeing an intentional consumer out there that's shopping for brands. They want value and they want convenience, and that points to off-price, best-in-class brands, and the retailers that sell those brands.
So who are the other big boxers, if you will, who are also going to be riding this new wave? If it is truly an inflection for all of them,
Yep.
Who takes advantage?
So I think what you're seeing, again, is the customer wants name brands. The name brands where you can find value, that would be your TJ Maxx, that would be your Burlington, that would be your Ross stores. But then they also want destination as well as experience and service, and that is what Macy's right now is focused on a fundamental perspective. And the last piece of this is the direct consumer brands. Look, they've done a lot of work, meaning you now can buy directly from Nike, you can buy from Ralph Lauren, you can buy from Coach brand. And I think that's the piece that the global brands have now put the investments in to stand on their own as well.
All right, so we have a big week of earnings. Nordstrom, Ross, Abercrombie, Foot Locker, Victoria's Secret, American Eagle, Gap among them. Is Ross your favorite of all the companies this week?
I think you're going to see strong numbers out of Ross and Burlington, so the two off-pricers. I think in the specialty space, we're focused on Abercrombie later this week. That's a company that's done a really nice job expanding that total addressable market as well. And I think, again, what we're focused on are these best-in-class brands. You've seen it with Birkenstock. You're going to see the continued results out of the brands that the consumer is coming out to with organic traffic.
What's the story with the Gap, which you upgraded to neutral on 226? That means you're kind of like, meh.
Margin self-help. To me, you've stabilized Old Navy, you've stabilized the Gap. That's 80% of sales. Now you have $150 million in cost savings, and on top of that, you have the product cost savings that the entire space is facing. I think the one other thing that I wanted to say here, look, you have a near-term inflection too, meaning our economists are citing $38 billion in wealth effect here. I mean, you have the S&P that's 75% higher than where it was in 2019, and you have the low-income consumer that's now going to be cycling the food stamp cuts, the tax refunds. So you're now back to, I think, a point of normalization, and that doesn't even put into place if we were to see inflation actually potentially come down.
Why was the most recent retail number then disappointing?
So tax refunds were against you in the month of February, and then in January you had unfavorable weather. 2 out of the 4 weeks were very detrimental. So the inflection that I'm citing is really now as you move into March, with especially this favorable weather that you've seen across the country, tax refunds move in the right direction, you lap against the SNAP and food stamp cuts, and you have this larger picture wealth effect that I think for the higher income consumer that trickles down to the aspirational, I think sets up very well.
Wow. So you think, I mean, the wealth effect from the market is one thing.
Yes.
Obviously, the labor market is stronger than people probably thought.
Exactly.
You get another read of it later this week. But as long as that remains intact, I think the runway for the consumer is what, endless?
I think the consumer is stable, and now you have normalization at the low end with a wealth effect at the high end. I think it's a very good picture for the consumer. The question is across retail, who wins? And that's what we were just walking through. Value, convenience, innovation, and differentiation.
What about Foot Locker?
Foot Locker, I think, is a mixed picture. So you have the battle between the direct-to-consumer brands and all of the digitization that Nike's been focused on, as well as the other brands. So Foot Locker's in the midst of a turnaround. I think their fourth quarter was better than expected, but now you have to lap some of these clearance actions as they've been working to get back to a place of stability.
You said Abercrombie, American Eagle.
I think
you have on a positive catalyst watch. You like both?
I think American Eagle's going to set up a 3-year outlook, and they're very focused on the margins, similar to the Gap, and so we see upside there, especially in 24 numbers.
All right. I appreciate you coming back.
Great to be back.
Matthew Boss with us right here at Post 9.